So a new warehouse bought during the year for 160 plus VAT at 12.5. The amount of VAT was entered in the building account and the bank account and went in the VAT account. So just so you understand what should have actually happened here, so we understand what we did so wrong. Anytime a business spends money on, buying new goods or building a warehouse, whatever it is, if we spend money on VAT, we can claim that money back from the government. So we're collecting money on VAT all the time when we sell goods. And anytime we buy goods, the VAT that we may spend buying those goods, we can use that to reduce the amount of VAT that we owe the government from what we've collected when we sold. So this 160 should have gone into the buildings account, not the VAT. So we need to work out what the VAT is, take it out of the buildings account, and then we need to put it into the VAT account. And the VAT is usually, in most of these questions, will be a liability. It's money we owe to the government. Now sometimes it might be an asset because the government owes us a refund because we've overpaid VAT, but generally VAT is a liability. So I need to take it out of buildings. So buildings, which at the moment is a debit, okay? And whatever that amount is, I'm going to take away the VAT from it. And I'll work out the VAT now in a second. So just look at the top of the question. So buildings is buildings cost $990, so it's included in the $990. Okay, so I'll take that away from $990. So we've got a DR of $990, and we're going to take away from that whatever the VAT is. Okay, so I'm going to go work the VAT out now. So the VAT. Is 990 times 12.5%. No, not 990. Sorry, what am I saying? It's 160. Times 0.125. Okay, so just change that so we don't end up with a mistake with our notes. So 20 grand. So that 20 grand needs to be put into the VAT account, and VAT is a liability. How much is, I'm presuming, VAT's a liability. Let's have a look. VAT is credit. So yes, it is a liability of 5.4. Okay. So I have a credit of 5.4. So we're going to add, okay, so we're going to increase it because there's going to be another credit. Okay. Sorry, no, it's a debit, because I actually owed a refund from this. So it was put into the buildings account. I'm going to take it out of the buildings account. So I'll be taking out 20 grand, which would be a credit entry in buildings, because buildings is an asset, so it'll be a debit. Okay. And that's going to mean that my buildings is worth 970. Okay. Now, if I've done a credit in buildings, that means I need to do a debit in VAT. So VAT is a credit of 5.4. So we're going to be having a less of 20 grand, which means, which is a debit, which actually means that the VAT is going to go from being, because the debits is more than the credits, we're going to end up with VAT being an asset, because we'll end up with more debits, so therefore we're owed a refund from the taxman. So I'm just going to call it CA, a current asset, of the difference in the two of them, which is 15,600. We'll check. So 20 grand, take away 5.4, 15,600. So that's correct. Okay. So that's going to go into my VAT account, and the 970 is the figure that's going to go in for buildings now. Okay. So I've dealt with that. Now, while I'm dealing with buildings, I'll continue and I'll do my provision for depreciation of buildings. So that's note number 6. And it's 2% of cost, so remember your depreciation, so reducing balances based on the book value of it. So let's have a quick look up here. So my buildings the original book value was 990. Now the buildings book, sorry, not book value, the cost. So this is the original amount of money I spent buying the buildings, but the buildings are now worth 932. The difference between the two of these is the provision for depreciation. So what I'm going to have to do with this one is I'm going to have to change my buildings account. Actually, sorry, no, the buildings account remains the same. So the new buildings account we've dealt with already. So that's 970. It's the only thing I'm changing is my provision for depreciation. Actually, just see that writing is getting smaller. I'm just going to change the size of all that. Now, so we're going to change the provision for depreciation of buildings, and we're going to have depreciation buildings expense. Okay, so we know that the new value for the buildings is 970. We've worked that out before. We'll multiply that by, sorry, what am I doing here? This is it's the depreciation expense I'm working out. So 970 is what the buildings are worth now, and we're going to multiply that by, I think it was 2%. Let's just double check. Yeah, 2% of cost. Okay. So that's going to go into, sorry, back to draw again. So that's going to go into my expenses. My provision for depreciation now, what I would do with that is I'll be putting that number, the provision for depreciation, I'll be adding 19.4 to it. Now, the original provision for depreciation is 990, take away the 932, because the 932 is the net book value, that's what it's really worth. So if I take 932 from 990, I'll get 58 grand. So the provision for depreciation of buildings is 58 grand plus 19.4. Okay, so that's the first part of it. Okay, now I'm not circling this one yet because we have to adjust it, because we have to do a revaluation. So we revalue the buildings to 110. So the buildings at present are worth 970. We want to increase them up to 110, so that means we need to add on 130 grand. Okay, and that 130 is the revaluation, and that's going to bring us up to our figure of 110, or sorry, 1.1 million. So the 130 is going to be my revaluation reserve. So I'll put that in. So when we do a revaluation, we increase the value of the land and buildings, and we cancel all the depreciation up to that date. Okay, so at the moment our provision for depreciation is 77.4, so we need to cancel that. So I'm going to take away 77,400. That means it's going to end up being worth 0. Let's stretch that a bit. Good. Okay, so now the provision for depreciation is 0. And that's the figure that I'll be putting into my balance sheet. Okay. My revaluation reserve is going to have the 130 that we added on to, which is, it would have been a debit entry, onto our buildings account. And then on top of that, we're adding the 770. So when we cancelled our provision for depreciation, so that figure goes into it as well. So that means our revaluation reserve is going to be 207,400. I add those two numbers together. And that figure will go into financed by in our balance sheet. Okay, so that's a little bit tricky. So the first thing that we did there with that, now I presume note 5 was okay for people. Note 6 is the one we need to, that can throw people. So the first thing we do is do our depreciation. We get 2% of whatever the buildings are now worth, and they've been changed in note 5 up to 970. So we change that and we get 2% of that. We add that on to our provision for depreciation. And the provision for depreciation, just to look, so that's the figure that we have in our trial balance. We worked that out by taking the cost figure and the net book value figure away from each other. So that ends up with 58. So 58, we add the 19 to it, so we end up with 77,400. But that 77,400 we're going to have to cancel when we do our revaluation. So we're going to cancel that and put that into revaluation reserve along with the amount we needed to increase our buildings by. So that's also going to go to revaluation reserve. And just remember, we need to put the 110 into our buildings account as well. So let's go and do all of that now. So we have land and buildings, or I think they just call it buildings. So 1.1 million. The provision for depreciation is 0 because we've cancelled all of it. And down here we're going to have in financed by, I'm just going to squeeze this in, we're going to have a revaluation reserve. And that's going to be the total figure. Where was it? Oh yeah, the 207,400. And then the last thing I have is my depreciation expense. Where are we? Yeah, 19,400. Okay, and we're going to put our VAT figure in while we're at it. Now remember, VAT, we ended up with VAT having a debit, which means it's a current asset, so it's 15,600 as a current asset. Okay, that's that.